Today, ladies and gentlemen, we're analyzing the Costco stock, a company so insane in 10 years it's almost a 500% with its 1% dividend yield. A company so big that if you go on YouTube, you can find endless videos of people showing you how to shop for cheap products, and it goes on and on for days, and I really look forward to getting through the balance sheet, the news, and everything else in between, so let's jump right into this. Welcome back, my passive income investors. By popular demand, a lot of you have actually asked me to review Costco time and time again. It actually comes up more than once. Today, I actually felt like it'd be a fun little video to go through and break down the Costco stock. I just was briefly scrolling through YouTube, seeing what was on here, and I just find like the funniest videos. The news is hilarious. Just how insane Costco is. Most people don't even know how the benefits for Costco works. Like, listen to this quick little video.
Nobody really needs to be told how to shop, right? But when you shop at Costco, the rules are different. As a card-carrying member, you're probably paying a ton for benefits you might not even know you get. You also might be making incorrect assumptions when it comes to the items you select. Here are some huge mistakes you could be making while shopping at Costco. Costco has two options when it comes to personal memberships: Gold Star.
You know what? I'm not going to sit here for 9 minutes and listen to all the different tiers of these regular looking people that are just shopping at Costco. But I really look forward to breaking this company down for you guys. And what my personal opinions on it are is I don't personally own Costco stock. And it's going to be a good from an outsider because honestly, I've never really broken the company down. And there's not much to look over, which isn't a bad thing. And I'll explain why that is in a sec. But I want to look at just a few more news articles because it's so funny that if you go on global news and search Costco, there's like a whole subsection of just news around Costco, and Costco's so bloody big. I mean, it might as well be like a small city on its own with shootings and traffic concerns and like I'm like, we're gonna go to Costco City today, and there's been one shooting. The traffic is unreal. It's just so funny that when you think of such a large warehouse company that's competing with Amazon as well. Now, it's Costco. The time to be buying Costco, I don't think, honestly, just by looking at the chart in and of this moment, might not be today. Costco is really pushing all-time highs as of right now, which usually isn't the best time to buy. I'm going to show you how to better gauge buying stocks at the end of this video, especially dividend stocks. There's a really good way to actually gauge buying them with one simple metric. So stick around for the end of the video, and I'll show you guys how to basically gauge off one metric. But if we take a quick peek here, guys, we can see Costco is flat for quite some time. We're talking like from where are we talking? Like 2015 here all the way up till pretty much the beginning of 2018, guys. Costco really didn't do anything. So you were sitting holding flat with this one for a while, like we were in many companies. There were many companies like Coca-Cola, a lot of the non-discretionary companies, they didn't do much for the last 5 years, but it's only been in the last year and a half that they've been really breaking back out. And we can see that maybe the better of times would have been buying it somewhere in these dips. Costco offers a lot of dips. How big is that dip there? It's about, a 15, 16%. So usually this company has good little 15, 20% down dips all the time on a regular basis. Like here's another 20% down dip. So to buy it somewhere up in these highs seems a little bit nutty. Considering it's had a 30% run from the bottom, which it seems to do a lot on all these little dips and runs. So right now, I'd just be patient, guys, and just keep watching. Aside from all the weird news, and like when they just open a new location, look at the lineup of people just trying to get in here. The news is just hilarious with this company. This company, everything about the news says this is an incredibly weird company because it's just so bloody big. And we all know what Costco's about. You can build forts in there and get lost. It's kind of interesting. Well, we go for the free samples, to be honest. If you've never seen Costco, guys, here's their website. Stupid massive warehouse company. They stock everything under the sun, and you buy it in bulk, so it's way cheaper. Apparently they even have hot tubs today. You get your wine and your wine glasses all in the same place. Everyone, this is awesome. TVs, it don't matter. Appliances, laptops, even gazebos, for God's sake. We got gazebos in here too, guys. Car accidents, it don't matter. We got insurance, home and auto. Like, does it ever end? The generators, like, it's just even Canada's Wonderland, starting with passes from Canada's Wonderland. It doesn't matter what you can't buy, you can get it at Costco, guys. I'm surprised they don't even have a TripAdvisor in there as well. But yeah, an incredibly weird company. It's just interesting to see how this company's evolved, especially now that they've been competing with Amazon. There was that big scare a little while ago, guys, which was probably one of the reasons the stock stayed flat, along with a bunch of other companies, was just that Amazon was trying to get into these kind of online businesses, shipped to your door, and ain't nothing holding Costco down, baby, with them cheap hot dogs and Them lunch specials, guys, where you're only spending like $1 for a hot dog and fountain drink. You can't go wrong here. We sneak in here for lunch once in a while just because it's so damn cheap. You could live like you're homeless in this place, I swear to God. And the website in and of itself is pretty straightforward, guys. It's kind of interesting. They make it nice, fluent, convenient. So I'm going to give the website a decent rating here. Maybe out of 5, I'd give it like a 4 out of 5. Almost a 5 out of 5, just because like it's so straightforward. It's just a straight website trying to jam as much shit down your throat as possible, make it look as appealing as possible, and they do the most professional job of it. It's not like an overkill website. It's just straightforward, easy to use. You get the idea the second you log on the website, everything's here, literally at a buttons click. You're not running around the website to find anything except investor relations. I find with companies like this, the hardest thing you're going to find is the investor relations page. So you usually have to go onto Google and search that separately, which we've done here. But the website's amazing. So we're going to go into the investor relation page, which I also absolutely love. This is something that I complain about a lot when I'm reviewing companies, guys. When you're looking initially, if you know nothing about a company and you need to understand its financials, and you look for the financial reports and you finally find them and you're going through them, usually companies make it a utter nightmare for you to find the information, because usually what we're looking for is like the 10Ks, the quarterly reports, just anything that follows the line of I need to see the financials. Any kind of numbers, product sales. I just want to see the stuff that matters. Like, is governance important? No. Is sustainability and commitment really that important? No. There's just a ton of stuff. And what a lot of people will do is they'll jam it all in like this first page where you have to scroll around forever. But the second you hop into the investor relation page, what do we see? We see recent news, Costco's wholesale reports for May. There we go. Oh, look, quarter to quarter date results for operation fiscal. Look, everything that I really want to see, their May sales, their quarterly reports, is literally on the same page. I'm not scrolling very far. I'm not looking very far. I see how high their stock's up. Like, that's what I love. And then we get like featured reports, which we'll go over here. Maybe we'll take a quick look at their 2018 annual report as well, which I haven't opened up, but we'll get into that as well. But like I said, I just love this layout. Very professional, very well done. Webcasts and presentations. You know what? Maybe we'll take a look at those too while we're here. Why not? We got lots of time. I got to go to work soon, but we got enough time. I think we should be able to get through a lot of this. But before I get into that stuff, I just really quickly want to go over literally their reports, because it's just so beautifully laid out. So I like the fact here right away they say, you know, this the net sales of 111.56 billion, an increase of 8% from 103. So boom, we already know. Just in that one line, like, you don't even have to go anywhere, and it's just there. That's what I love about this company, guys. And then we can go scroll through real quick and see the 4-week and the 39-week end here, and exactly how much the increase was or decrease depending on US, Canada, or international, and e-commerce. They definitely make that e-commerce important too. But I love this layout. We got US, so you can see overall, guys, the increases have been fairly decent. This is a nicely growing company, has been for a while. Obviously, by their chart, it looks pretty intense. If we go into the fiscal 2019 here, guys, we can see the overall adjusted increases and everything else. We can scroll down and we'll take a look at their books. We're going to do this toward the end of the video as well, because I want to look into their balance sheet and go over some of the important details. And I've double checked this. They're fairly accurate already because the company's so big. Usually these bigger companies are more accurate toward like Yahoo Finance and like M1 Finance and like My Scotia iTrade account, which makes things a lot easier to use. And you can take a quick screen through this, because you can see selling and general administrative is one that I look at a lot. I always like seeing what they're paying staff, because that's usually like staff and employees and general administrative stuff cost the most. But like I said, you got total revenues, you can see, guys, has been increasing quite nicely. This is 12-week and 36-week end, right? So like I said, let me come back to this because I don't want to bore you out too much here just yet. So let me go into other presentations and stuff like that, because that's what I really want to just take a quick little peek at, along with their, look at the insane increases. It's kind of wild, really, since 2009. So as we quickly scroll through here, guys, we can see Canada, Mexico, United States. We can see how many insane locations this company has in Japan, South Korea, Iceland, United Kingdom, France, Spain. They have only 2 Costcos in Spain, but 28 in the United Kingdom. Australia's got 10. Just insanity how large this company truly is, guys. So you guys can go through this. I'll leave all the links in the description below if you guys want to check more of this out. It's a very fascinating page. There's too much to read on here right now. We're talking 78 pages. I just want to take a quick look at their webcast stuff here in their presentations, because the presentations usually are the forward-looking information where we can see really what's going on. And I try and look at these in every stock review because this is going to give us a really good idea of exactly what is going on. It's the third largest global retailer, massive conglomerate, 14th largest in the Fortune 500, 106 billion market cap, which is staggering. Yeah, it's 1/10 of $1 trillion. So we're not talking Microsoft level here yet, but damn, for retail, it's friggin' huge. What do we got here? We got 112.1 million square footage of 109.5K wholesale, 243K employees worldwide, which is, oh my God. Could you imagine employing 250,000 people? That's crazy, man. Just crazy, crazy. Costco. Today we can see all their locations. Obviously 500, the US is their biggest, Canadian, and they're just expanding in Mexico, UK, Japan, Korea. This is good because this means they're probably going to try and expand more globally. And this looks like they're only just starting to really breach out. I haven't looked into this company in the past, so I don't know when these companies came into fruition. Like, when did they open up the one in Iceland or France? You have to do a bit of deeper research to find that out. But if they're looking to expand further, which I'm sure they might mention somewhere in this report. So let's just keep scanning through here. We can see that the sales have been increasing, averaging 10% year over year. Gross margins, everything looks beautiful. We've got earnings per share adjusted, which has been increasing really nicely. Third quarter earnings per share again. Let's just keep scrolling through. What is this? So these are probably their brands, because I know Costco buys specific brands because they like to. It's kind of like Coca-Cola, right? Like, you want to also own the things you're selling. You don't want to just be a warehouse space, because that way you get everything full circle. Go ask Amazon. Electronics, global apparel sales obviously been increasing. I don't buy my clothes from Costco, but I know some people that'll buy stuff there. Jewelry, yeah, that's another weird thing. Costco is such a weird place, man. They're like, if we just open a warehouse, put everything in one space just to make it a tiny bit cheaper, make people have to get cards like members so they feel special and they can just buy everything under one roof. It's weird because when you usually walk into stores, they try and cater around the products. Like, if you walk into an LCBO, the wine section is very celery looking. Celery looking, that's kind of a funny way of putting it. It looks like a cellar, right? Like, they usually put it around like wood cabinets and things like that, which they tried to do with Costco. But the problem is it's the foreground where you're going to see these massive, those massive stacked shelvings and things like that. So it's kind of weird how they try and brand it like this, because this is what reminds me of Costco, is this image here. Produce sales, sourcing from 44 countries. How many countries are on the planet? There can't be much more than 44. So they're probably pretty much using everybody under the sun to pull this off. Cakes, meat department. I'm going to scroll through this a little faster. It looks like we're just getting a lot of highlights. We're not even getting a forward presentation yet. Where does the forward presentation begin? Or is this just generally what's actually going on? You know, this company's so big, they're like, we don't need a forward presentation. You guys know what we're like. Look at how packed this is. We got lineups out the door for our gas stations, baby. This thing's amazing. Car wash, tires. Yeah, this looks more or less something like a how about we just really jam everything we do down your throat? What? Oh my God. Oh, they do travel. They do travel. Oh my God. Oh my God. That's so funny. They even do travel now. Okay. All right. I was joking about it earlier, but apparently they actually let you fly on planes and they'll book your trips for you too. Fascinating. And here we go. Forward looking for 19 financials. This is what I'm looking for. Long-term debt. Nothing crazy. We're going to go over more specifically of this in the metrics that I told you can use to gauge this company in a sec. But overall, that's what I come for right there. Those hot dogs, man. I like the cheap hot dogs and lunch. So anyways, I guess this is a good time to actually start looking into their financials. We'll start with the metrics first, like the balance sheet and just generally understanding this company. And then I'm going to get into the metric that I'm going to tell you the only metric you'll ever need to use to understand whether a dividend stock is a buy or not. And it's the most valued metric, I do believe, when it comes to dividend investing. But I'm going to use Yahoo Finance because I think you guys are a little more familiar with this than my Scotia iTrade account. And we'll just go into the financials real quick. And what I want to show you specifically is the balance sheet. We're going to look at the cash flows as well. But the only thing that I really look at right away when I jump into that balance sheet, guys, is one that I mention a lot, which is total assets. How much total valuation on their assets do they have today without income or anything, just basic assets, guys, cash in the bank, buildings, real estate, the whole 9 yards, 40 billion. So we're looking at 40.83 $3 billion in total assets. And then if we scroll down to the liabilities, which is right here, the total liabilities, we're looking at $27.72 billion. So if we scroll up here, guys, and what we like to do is minus out the total assets versus total liabilities, and that's what we actually see the actual fundamentals of the company. If you had to sell everything today, you weren't making another dime tomorrow, but you're trying to sell off the underlying assets, that's what it would be worth. And what I like to do as well is you can compare that to, so what are we looking at? 27, 40 minus 27 is what? Math here, 12. I think it's around what, $12-13 billion they have in just assets alone. So if we look at their market cap, we can say that they're trading fairly high above that valuation. They're trading actually at a 10 to 15 times their actual asset valuation. I use this metric because it kind of lets you know how much the company trades for versus the fundamentals. Like the tobacco stocks is one that I talked about a lot, like British American Tobacco. At one point, it was trading at literally almost the base value of what its underlying assets were worth, which is absolutely mind-blowing to me. But let's keep going here, guys, and we'll keep scanning through because I want to see their cash flows as well. But that's a good metric to understand if the company is, first of all, well above water. And then what we like to look at along is with the debts. So net receivables, 1.6. What else do we got here? We got goodwill, which they obviously aren't giving anything to goodwill, apparently. Property, plant, and equipment, deferred long-term charges, which is what I talk about as deferring long-term capitals, so you don't have to pay, which is $360 million. So they're doing a good job deferring capital as well. Other liabilities, which is really what we want to see. We want to see their current liabilities, which is 19.926. Look at their cash flows. We know for sure they have no problem covering those because if we scroll in here, we can see their net income just like 2015, 2016, 2017 and 2018, like the net income has increased staggeringly. So in literally this is like 3 years. So from 2015 to 2018, guys, we can see that the net income has actually gone up by like 30%, which is friggin' massive. Because that means you're pretty much doubling your revenues every 10 years or so. Maybe a little less than that, which is really awesome. We can see we've got some depreciation, which is something every company is going to do to try and not pay as much tax as possible. Total cash flows from investing activities. Negatives, nothing crazy there to understand. So Costco, guys, if we go into just the income statement and we look at the crazy total revenues and gross profits, you're going to be rolling around on the floor because, man, oh man, operating income loss is nothing nearly as close to their gross profits, which is all that matters. So we can see that just going through here, interest and expenses, income before tax, income and tax expenses, non-recurring event. And then here I like this little chart on the side because it shows you revenue versus earnings. But trust me, with their earnings, they have no problem paying any of their bills. It's a pretty straightforward, all-around, just solid company you can add to your portfolio. And if you want to know when to add a company like this, I honestly think Costco is an amazing company long-term. As a short-term dividend investor, and what I mean by short-term is I'm looking for higher yield stocks today. This company doesn't really fit my higher yield, and it's generally what I would call an S&P 500 company. It has a rate of return of about... So this company has an amazing rate of return. So it looks like every 5 years from 14 to 19, it's doubled its revenue. So that means you're, tripling your money every 10 years. So if you put $1,000 into it 5 years ago today, it's worth... So if you put $1,000 into this 5 years ago today, it's worth $2,000, which is pretty healthy for a 5-year rate of return. That means you're doing really, really, really well. You're doubling your money every 5 years, apparently, with Costco as it seems to stand today. So that means 10-year term if we go all the way back, which would be taking us to from 2019. We'd have to go to 2009, which obviously was right after the Great Crash, which you'd be getting an insane return. Almost over 400%. That's a 4x return. Wow, that's not too bad. It's not too bad. That means for every 1,000 you invested, you'd have 4,000 today, not including the dividend yield. But let me tell you how you're going to know when to buy this stock, because you're probably thinking about yourself, how do I know when to buy these kind of companies? Well, you're going to come into dividend history, and what we like to look at is the average yield. And when we scroll through and we just take a quick peek at what the average yield is, usually what you want to try and do is figure out what that average yield is. And with a company like Costco, we know the average yield is usually around 1%. Usually it's a little higher than that, and when the company goes on a run like this, which we can see especially over the last it's actually down over the last 5 days. On a 6-month run, guys, if you were buying this company 6 months ago, you'd be well over 1% yield, which we can actually see in right here when we see what the yield is at that current time. Why did I click yield? That That was dumb. Let me go back because I don't know what that does. But if we just scroll through and take a look at the yields, guys, holy crap, they spit that special dividend. Their dividend increases have been really healthy, but the problem is it's not fast enough for me. It's not really a dividend growth company. It's kind of, let's just pay you a little bit of dividends, keep you above inflation, and then we'll give you a really good rate of return on the equity. But I want more of a return on the dividends and not the equity. But we can see we still had really nice healthy increases, considering from 2014, 5 years ago, we went from 30 cents all the way up to 65. So that means we've doubled the dividend in just the 5 short years, which is nice. So it would take you from 1% to 2% in 5 years if you were buying it today, and it kind of kept the same rate of return. But overall, we want it to see, if we're ever buying this company, guys, we can see that the rate of return is usually over 1%. So I don't want to be buying this company unless it's giving you a 1% dividend yield. So you just got to wait for those dips. And when you see the dividend yield go up, and the higher it gets, the better. And that's how you're going to want to gauge dividend companies, guys. You want to look at the average over the lifetime of the company. What is the average rate of return been on the dividend? Has it been 1%, 2%? Then what you want to do is you want to see where the dividend is today, and is it above or below that average? If it's below that average, it's probably not the best buying opportunity. If it's above that average, there's a chance the company's on sale and it might be a buying opportunity. And then you can gauge further by looking into the fundamentals as well. Overall, I'd say Costco at this point, I wouldn't be buying it. I'd wait for a pullback at some point. Will that come? Who knows? Maybe you're a long-term investor. You want to buy a little bit now and buy a little bit later on the dips, or average in over time. That doesn't hurt either. Personally, I'm not buying this company. It doesn't fit my moral standard, but it's an easy to understand company. It's straightforward. They're doing a great job, and I'm pretty sure it's a reason that Warren Buffett actually owns Costco. I'm pretty sure. Does Warren Buffett own? I'm pretty sure that's part of their actual holdings as well. I should have put Berkshire, but Costco. See what comes up. Warren Buffett, Costco, Kirkland Brands, Thrive, business. What does Berkshire Hathaway actually do? 3 Warren Buffett stocks to buy now. The Motley Fool. I'm going to imagine that Warren Buffett is in here. We'll just do this real quick. Does Warren Buffett own Costco? Somebody searched this before. Yes, that's what I thought. So Berkshire Hathaway, he owned 159.654. Costco shares worth 24.1 million, representing a 0.4 stake in the company. Costco is also a favored stock of Warren Buffett. So I can imagine. I mean, Costco, straightforward, easy to understand. I love it. It's a great company, guys. If you want to buy it, buy it. Nothing wrong with that. And if you enjoyed this breakdown, guys, remember, slap a like and consider subscribing. If you have any more questions, never hesitate. I can get back to you on those as well. It's been a long video. I hope you enjoyed it, guys. So stay cool, stay awesome. I look forward to chatting to you real soon.